Hey, Bitcoin wealth builders. Welcome to Bitcoin Hard Talk, episode 92. We're going to be discussing everything about the plan that I see unfolding with BlackRock and the Middle Eastern Gulf nations and how that relates to what we're seeing right now in the UK and European Union surveillance state, with the UK being the beta test for what needs to be rolled out around the world. And we're going to dig deep into how these different subjects impact both everything that happened this week in Bitcoin, this week in macro, and this week in geopolitics. If you are new to Bitcoin Hard Talk, welcome to episode 92. This is the hardest talk about the hardest form of money as we transition to a world of Bitcoin AI and central bank digital currencies. If we haven't met already, welcome. My name is Simon Dixon. I spent the last 25 years of my life obsessing over the topic of investing and money, and 14 years in Bitcoin, speaking at the first Bitcoin conference and writing the first published book in the world to include Bitcoin. So let's take a little bit of a deep dive into what we're going to be covering today. Alongside everything that happened in this week in Bitcoin, the overarching theme is going to be Bitcoin versus the surveillance state and how to protect yourself. In part two, when we do this week in macro, I'm going to be going through all of the trade deals that have happened. We're now at the deadline with many of the global trade deals and the economic plan around the global surveillance state as it relates to everything that happened this week in macro. And in part three, we're going to be doing this week in geopolitics. And that's where I'm going to go through how BlackRock and the Gulf Wealth are building the UK and EU surveillance state. So you've got the theme of surveillance that's going to be popping up with everything, but we're going to tie it all together by following the money so that we can get more prepared for this world of Bitcoin AI and central bank digital currencies. So let's jump right in with part one of Bitcoin Hard Talk, episode 92, this week in Bitcoin. So we were promised this week from America, there was a big bunch of hype around the White House is going to be releasing their long-awaited crypto report. And obviously the speculation that many wanted is to find out how many Bitcoin the US government owns. It's kind of become like a bit of a mystery, a bit like Fort Knox audit, never to be audited, a bit like the Federal Reserve audit, never to be audited, a bit like the Pentagon $1 trillion that just poof, disappears in the air. Suddenly, America's Bitcoin strategic reserves have got lost in a boating accident. So we're allegedly down to 28,000 is the latest information from the last Freedom of Information request. And I covered this in previous episodes of Bitcoin Hard Talk, so we're not going to cover that today. However, the report didn't include anything to do with the Bitcoin strategic reserve, which is what I think most people were looking for. Well, if you're a lawyer, or if you're involved in crypto scams, or if you're involved in launching stablecoins or tokenizing real world assets, or getting involved in all the different iterations of fiat currency on a blockchain, or if you're a bank or if you're a financial institution, then you would have loved the crypto report because it really outlines some of the things that America's going to do to be the center of crypto. And all that really matters from your perspective is that you get to own Bitcoin in self-custody while you leave everyone else to create these fiat currency debt-based Ponzi schemes with blockchain assets that sit on top of the equivalent of fiat currency, pre-mined shitcoins. And obviously there's going to be a little bit of a stable coin that makes it easy to send it around as they take these real world assets, tokenize them so that BlackRock can usher in this mass surveillance state of programmable digital assets and programmable money, and you get to resist against it with peaceful proof of work by owning more Bitcoin this month than the previous month and learning how to hold it in self-custody rather than hold it in custody with BlackRock. But anyway, just like Bulgaria, which we've covered over the years, it's kind of become a long-standing joke. The government of Bulgaria seized a couple of 100,000 Bitcoin back in the day. And it could have been used as their strategic reserve assets. And in fact, at today's price, it would exceed the national debt of Bulgaria. However, it seemed like they disappeared in a boating accident and some politicians ended up with the private key and Bulgaria doesn't have it on its balance sheet. So I haven't yet to see an item line on the US government's treasury balance sheet that includes Bitcoin. Once it's known, once it's audited, it can go there as a Bitcoin strategic reserve. But it's kind of anyone's guess for now. We're having more and more adoption, more and more warnings from the traditional TradFi players. As far as it goes in TradFi, Ray Dalio has been the billionaire hedge fund manager, and he's always been warning of a change of world order, a change of empire. And he's done some great content. I recommend his books, anyone that's interested in changing order and some of the stuff around principles and various other stuff. I think he puts out some good content there as well. But the billionaire Ray Dalio, he's always had like this, he's been the manager of sovereign wealth funds and hedge funds and various other things. When Trump went on the tour, he's certainly one of those people that comes along when he was touring across the Middle East and the Gulf nations. But Ray Dalio came out, and for the first time, I followed his journey all along. Initially, he thought Bitcoin won't succeed because the government has guns. It was kind of like a Jim Rogers type of ideology. He understood the economics. He believes in gold and commodities, and he believes that there is a changing world order. He believes that there is he was forecasting and getting people ahead of the China trade relative to the American trade. And he's always been warning about what will happen to the dollar in terms of deep monetization as we enter into this fiscal dominance era that tends to lead to civil unrest. But he was always recommending an allocation to commodities to be protected during these changing world orders. His philosophy is cash is trash, but he also had a bit of a bond, stock portfolio with an allocation to commodities. But now he's recommending, based upon Bitcoin's position today, that commodity portfolio should consist of Bitcoin. And in fact, he recommends that investors today should have a 15% portfolio allocation to Bitcoin as a hedge against devaluation from the Federal Reserve and the debt-based Ponzi scheme. So it's pretty interesting to see Ray Dalio's journey to now getting to a 15% allocation to Bitcoin. At the same time, we had the financial terrorist, or the puppet chairman of the Federal Reserve, that essentially is there to announce what the banks want him to do every quarter, because the Federal Reserve works for its shareholders, and its shareholders are the banks that have those accounts with the Federal Reserve. But the sitting duck chair, Jerome Powell, who's about to leave, he came out and said that Bitcoin is like gold. It's digital gold, which is interesting to hear from the Fed chairman. Now that BlackRock is accumulating its position after Operation Choke Point 2.0, where the Federal Reserve, the SEC, and BlackRock took down the crypto markets, wiped out many of the crypto-friendly banks, so that they could launch their Bitcoin ETF and launch their own regulatory regime under the new Trump administration, where banks get to put Bitcoin on their balance sheet. And BlackRock, transitioning to this multipolar world, has been getting all of their clients into Bitcoin. But of course, those TradFi clients are not holding it in self-custody. They're holding it with BlackRock, in essentially making BlackRock the custodian via the public company Coinbase, which myself and Bank to the Future investors were shareholders in right in the very early days when our market was a lot smaller than what it is today, where the sharks are all swimming around and saying, we destroyed our fiat currency, we've taken our proof of weapons network, and we have inflicted violence and war around the world. And eventually that's going to no longer work. So we're looking for our new host nation. But in the meantime, let's protect ourselves with Bitcoin and protect our clients with Bitcoin. But fortunately, Satoshi Nakamoto anticipated this and said, we're going to create an algorithm called proof of work rather than what the other coins are created on called proof of stake, which means that it doesn't matter who actually owns it. the most you can do with a large position is you can sell that position, or you can borrow against it, or create some derivatives against it, which means that only in the short term can you engage in price manipulation. And guess what? When you're dealing with a fixed currency supply, where 74% of the Bitcoins are held by long-term holders, and 70% of the wallets are out there in self-custody from people that nobody knows who they are, it becomes a very hard asset to manipulate long-term. And you can only engage in short-term manipulation just to persuade you to sell your Bitcoin to them and borrow against your Bitcoin so they can margin call you and steal your Bitcoin. But you like it when the price of Bitcoin goes down, because it means that you're valuing your wealth in Bitcoin. And when you earn your fiat currency every month, as the price goes down, you get to buy more Bitcoin with your fiat currency. Measure your wealth in Bitcoin, not dollars. Don't fall for the optical illusion of measuring your wealth in a deflating ice cube called fiat currency that's based upon a debt-based Ponzi scheme and destroys your wealth. And when you're measuring your wealth in stock market and all the other financial weapons that are used to pull together your money and get Wall Street to manage it for you, it looks like stocks are going up, when in reality, if you price it in Bitcoin or you price it in gold, you realize that you're not getting ahead on the treadmill. It's just an optical illusion because of the weakening and devaluation of the dollar and its purchasing power. We had a little message from El Salvador. We're tracking El Salvador in terms of Bukele having to bow down to the International Monetary Fund and the economic hitmen over there, because unfortunately they didn't have enough Bitcoin strategic reserves. But at the same time, they're claiming that they're building and adding to 1 Bitcoin every day to their strategic reserve. But the IMF says they're not. They're just shuffling around Bitcoin. So we'll keep watching it. And Bukele changed the law in El Salvador so that he can have a second, not just a second term, a third term, but it will last over 6 years as well. But he's been advising other governments as well. And so there was a deal that was signed between El Salvador and Bolivia. And they signed in order to integrate Bitcoin and crypto into Bolivia's financial system. Now, El Salvador has built their economy around a Bitcoin first type of approach, which is the right approach. You know, you can mess around with the shitcoin casino, you can do some stable coins, you can do the things that you need to do. But when it comes to legal tender, Bitcoin is the game. When it comes to treasury reserves, Bitcoin is the game. And so we'll start to see what types of activity we get in Bolivia. But upon the announcement, there was approximately a 6x surge in basically, since Bolivia in 2024 had a ban. And so these countries are now capitulating. They're banning in order to control, and now they're embracing. And there's been about a 6x increase in activity from a complete ban to where it is right now, where it's working with El Salvador to see how Bitcoin can be integrated to allow it to protect itself from the bad options of the International Monetary Fund or China's Belt and Road Initiative. You can use your own Bitcoin sovereign strategy. Now, while I prefer to separate state and money, and Bitcoin gives us that option, it also is Bitcoin is for everybody. So if countries want to protect themselves and remain more sovereign, then they can also use Bitcoin as well. And this is basically another nation that's working with Bukele's team in order to build a Bitcoin-based economy. So we will keep tracking that. The country with the largest Bitcoin per capita in the world is the Kingdom of Bhutan, that has used their hydropower in order to generate electricity to mine Bitcoin, where approximately 50% of the country's GDP is held in a Bitcoin strategic reserve. So speaking of some of the companies that are using treasuries, so we now have talked about this, approximately 1 million Bitcoin of the 21 million now is held on the balance sheet of over 100 public companies. And one of those, I think the second largest, is the Bitcoin miner Marathon, MARA. Now, they're actually a really bad Bitcoin miner when you look at the stats, but you get to use the illusion of the debt capital markets and the equity capital markets to extract a bunch of value and pay yourself shit tons of money in salary and stock options, as long as you can keep raising capital, which is what these US public miners do. And so they're looking to raise another $1 billion in order to buy some more Bitcoin. I'm not recommending anyone to invest in all of these, introducing counterparty risk between you and the perfect asset, which you can understand, where Bitcoin only will ever have 21 million. And as more people lose them, the supply actually contracts. Hopefully you won't be one of those people that lose them. We're going to be, I'm actually going to be working. One of the most frequent questions I get is, Simon, how do you self-custody your Bitcoin? Don't worry, I got you covered. We've created content back in the day with some of my contacts where we go through all of the security rules to make sure you don't lose your Bitcoin, unpack a box of a hardware wallet, and show you all the considerations to start with and as your wealth grows. I think we're going to be uploading that. In fact, I think we've already uploaded that into the completely free Bitcoin HardTalk membership portal, and you can get your free login at simondixon.com. The reason we put it behind the login is because we are massively shadow banned on our channel. In fact, we did a little bit of an experiment. This week, I did an interview on George Gammon channel. He's a financial analyst. And on the channel where he does his interviews, Renegade Capital, he had approximately 16,500 subscribers. That video has now had over 100,000 views. And so we thought we'd experiment. What if we take the same video and call it the exact same title and put it on my YouTube video, which has 100,000 subscribers? And guess what? Now you got us to 100,000 subscribers. We got our little plaque. So congratulations. Thank you all to everybody that has shared on this journey to getting us to 100,000 subscribers. So we uploaded the video and I was covering, I'm going to do a little AI review in part one of that video so you can get the TLDR summary in case you don't have time to watch it, and also point you to where you can watch it as well.
Hey, Simon, just a quick correction. You said Renegade Capital. It's Rebel Capitalist.
Rebel Capitalist. Thanks, Azad. Okay, so we would have sent everyone to another YouTube channel, Rebel Capitalist. Sorry, George, if you're watching. So thank you, Azad, saved the day to make sure we sent you to the right place. Right, so we took the same video with the same title and uploaded it to our YouTube channel, which has approximately 101,000 subscribers now. And the same video that got 100,000 views on a YouTube channel with 16,500 subscribers only got 10,000 views, because we rely 100% on having to mail our list and tell you about our videos, because YouTube doesn't want you to know what we got to say. So it just shows you categorically with proof that YouTube doesn't like what we're saying. So with that in mind, that's why if we ever get banned after these shadow bans, make sure you've got your free login at simondixon.com, because we've even set up a backup infrastructure where we can go live from within the portal, if just in case. We're preparing for that day because we want to make sure no matter what they say, no matter what they do, you are prepared for a world of Bitcoin AI and central bank digital currencies. And so, yeah, that little experiment there as well. Right, now, speaking of Bitcoin mining, I think there's another interesting thing we need to watch as well in the Bitcoin mining industry, which is that if you understand, and in 2013, I launched my first Bitcoin mining operation in Iceland, way back in the day. Wow, 12 years ago now. One of the most important cost is obviously electricity. And then you got to purchase equipment, and you got to cool that equipment, and you got to have uptime, which involves setting up an infrastructure. It's a very hard business to run. But with tariffs, it kind of dawned upon me that, of course, the most expensive thing is electricity when you're doing your Bitcoin mining operation. But before, you used to have to sell all your Bitcoin in the market because you would have to, your electricity provider probably doesn't accept Bitcoin. And if they do accept Bitcoin, they'd want you to convert it into fiat currency, or they'd convert it into fiat currency. So the Bitcoin miners historically were one of the largest sources of sellers of Bitcoin. And we recently had this 80,000 Bitcoin, the historical trade from a 2011 wallet, and they sold $9 billion worth of Bitcoin. But the reason it didn't affect the price is because over the counter, there's a lot of demand for Bitcoin. And in fact, there is significantly more demand for Bitcoin at the moment than the miners that need to sell their Bitcoin to pay their electricity bills. So the reason we're having this changing dynamics in Bitcoin at the moment is because you still got a fixed supply. But when miners want to sell their Bitcoin, they're probably selling them over the counter, and they're selling them to basically this constant bid of Bitcoin treasury companies that now want to manage their, rather than having dollars, they want Bitcoin on their balance sheet, particularly around some of the changes in rules that are happening with the accounting that I'll go through today. But essentially, the mined Bitcoins to pay for the electricity are going over the counter, and they're never really hitting the exchange. So there's no oppression of the price based upon the miners needing some dollars to cover their electricity cost. And in fact, there is excess. There is not enough newly mined Bitcoin relative to people that want to buy those in those over-the-counter trades. And so this is one of the reasons why we're getting this steady uptrend in Bitcoin. Now, of course, that can reverse. When the market cracks, they need to sell more Bitcoin. And maybe as the price goes down, they'll look to get it at cheaper rates. But right now, the dynamics of the market is the Bitcoin treasury companies are buying more Bitcoin than is available to the miners that need to sell that Bitcoin, which is having a significant reduction in the sell pressure. Now, also, let's think about the dynamics at the moment. Approximately 1/3 of Bitcoin mining happens in America, particularly Texas, because they're using it to stabilize the grid. And during times of when Texas needs excess electricity, they can purchase it off the miners. And when there is wasted electricity, the miners are able to monetize that electricity. So it's really helping them stabilize the grid and manage it a lot better. But the machines required to mine Bitcoin, they are all manufactured in China. So approximately 90% of all ASICs are purchased from China, which means that if any of the American Bitcoin miners under a China tariff deal would like to upgrade their equipment and receive that machinery, I'm assuming that's going to be subject to the US tariffs. And so this is going to add significant cost to the US Bitcoin miners. And this is something we need to consider because many people ahead of the Liberation Day on April the 1st, many companies were trying to front run those tariffs, which is what led to a manipulation of the figures. And now we're starting to see that. I'll be covering that more in the macro section. But you can imagine the same things happening with these Bitcoin miners and ASICs. So any tariff on Bitcoin miners that need to, where the ASIC manufacturers will just charge it on to America because they can choose who to sell it to. They sell it to miners in other jurisdictions, but they want to sell it to the same price to Americans. So they'll have to pay whatever the tariff is. Let's say it works out at 30%. Then they'll have to factor in that their machinery is 30% more expensive relative to other miners. And so it essentially is a tax on mining Bitcoin within America. And it will be interesting to watch whether the Bitcoin or crypto lobby do anything about that and what actually comes at the end of it. Now, we'll cover it more in the macro, but at the moment, the tariff with China has been extended out for another 90 days or so. Speaking of which, we hit record highs in Bitcoin mining. the hash rate, the security behind the Bitcoin network, this distributed supercomputer that is geographically located around the world, that means that no government, no central bank, no one player can take down the security behind Bitcoin. It has now hit 1 zettahash per second. I don't know how to exactly explain that, but this is by the largest distributed supercomputer by orders of magnitude that exists today. And that provides all the security behind Bitcoin and this proof of work network, which makes it 100% unique relative to anything else that anyone tries to launch, to either try and compete with Bitcoin or even try to run any kind of attack vector on Bitcoin. It is now absolutely infeasible to put together any type of budget to take down Bitcoin, and the economic incentives just don't line up relative to what you can do as well, plus the geographical location, plus it's just economically infeasible. So speaking of which, everybody needs to jump on board. So all of the different types of companies, they're figuring out, can I put Bitcoin on my balance sheet as a treasury asset? Or am I going to engage in the shitcoin casino and maybe launch stable coins so that I can receive a bunch of yield from the debt-based Ponzi scheme of the US government? If you want to go over to my blog where I did content with George Gammon, I put together a whole blog. I'll do an AI summary at the end of part 1 on that, but you can watch if you're really interested in this topic. We went really deep into the implication on the Federal Reserve balance sheet, the US debt, surveillance, all sorts of stuff. We went deep into the implications for those that want to dive deep. But obviously, every company now wants to launch a stable coin. You get to have free government treasuries, and then you get to take the yield on the government debt and convert it to Bitcoin and hold Bitcoin on your balance sheet. So with that in mind, we're getting a flurry of innovation from the tech companies and the fintech companies and the banks that are looking to adjust to this new paradigm. And so PayPal has basically come out and said that they're now allowing merchants. So when you're paying using PayPal, the merchants are going to be able to accept crypto payments. So whenever you make a payment, you'll see another option. It will be like card, use your PayPal account. And if the merchant wants to accept crypto, I'm sure they'll have an automatic exchange as well, or you can accept the Bitcoin direct as well, which is awesome because earning Bitcoin for your company is a great way when you can manage that treasury and have your long-term savings. So rather than being in the debt-based Ponzi scheme, you can start to accumulate wealth for your company with these Bitcoin treasuries based upon keeping a fraction of your margin within Bitcoin. Now, what are we starting to see? The biggest brokers, they're now thinking, well, I remember, what happened with the Bitcoin exchanges. Once we had stable coins, we realized we could go from one exchange like Bitfinex to another exchange like Kraken to another exchange like Coinbase without having to touch the banking system. And the way we did that, of course, was with stable coins, because stable coins you're able to send between these exchanges, and you don't need to get permission from a bank and have these 5 days and KYC and all this problems in between. And so it started to really open up liquidity when you could make all these different exchanges interoperable, and it made them all better as well. And so we're starting to now see, I think, the first signs of that in the traditional broker business. So one of the largest discount online brokers in America is called Interactive Brokers. And they now said that they're considering launching their own stablecoin. Now, they don't need to launch their own stablecoin. They could just use an existing stablecoin. But now you should, once this goes through, you'll be able to go on ramp into a stablecoin, convert it into shares, and get it out, and then maybe go from a stablecoin to another exchange, maybe E-Trade or something else. And this is one of the largest online retail brokerage in the whole US as well. I remember the days when they wouldn't even allow you to deposit funds if it came from Bitcoin. Boy, how things are changing. It's kind of like just moving money between exchanges, as easy as sending an email, which means that opens up to competition and allows us to put our assets where we need to when we trade them. And obviously, if you hold it in Bitcoin, you can self-custody. But this made the industry really open up in the crypto exchange industry. Maybe the same will happen with the brokerage industry. And speaking of brokerage, we had Robinhood, one of the companies I invested in very early in private equity. It's now heading up to new all-time highs as a result of these different trends that are happening as well. Another fintech company, eToro, they launched in Europe. They're now going to be using tokenized US stocks, just like Kraken did. So rather than having a stock market that is open during market hours, you can now tokenize a stock, make a market in it using a tokenized asset, and it can trade 24/7. And eventually, as more and more brokerages do the same, you can probably go from one brokerage to another, and then you can transfer those assets between exchanges, which has been a horrific process in the past. If you've ever tried to take your stock from one broker to another, particularly if you're in a offshore jurisdiction, or maybe you did it via a tax efficient trust structure, nightmare. It can be one of the hardest processes to get that, and just a paperwork nightmare. But now with these tokenized assets, and they said eToro is going to be doing it on the Ethereum blockchain as well. Speaking of which, $26 billion bank in, what's it called? Rack Bank, which is now become the first bank in UAE. So many of the companies were going over to Dubai. And one of the biggest problems with it is the banks were still not on board. This has been a consistent problem. You can have a government and a jurisdiction that wants to embrace the industry, but often governments are subordinate to banks. And so banks can end up choking the industry, as has happened many times over the last 14 years, has happened on the Isle of Man and many, many different places as well throughout the whole history. But UAE has now got its first bank to offer Bitcoin and crypto trading natively within the bank. Look, I'm advocating for Bitcoin in self-custody. I will always call out the TradFi, banksters, but the financial terrorists are all coming in to help you get your dirty fiat currency from the proof of weapons network and convert it into peaceful proof of work, which hopefully you'll take the lessons, not store with them, and we can demonetize and boycott the system. But for now, we need to go from our dirty fiat currency proof of weapons network, war mind, death, destruction, genocidal currency, and convert it into something where we can boycott and drain the swamp, as it were. Now, speaking of Bitcoin treasury, the number one company has been MicroStrategy, now known as Strategy, and they purchased this week 21,021 Bitcoin for approximately $2.4 billion. So they're still buying. As they said, they will always be buying the top because they know that Bitcoin fixed supply and the stock to flow ratio and the economics historically. And so the average price that they paid for their $2.4 billion of Bitcoin is $117,256 per Bitcoin. So that gives Strategy, the public company, tradable upon the NASDAQ, 628,791 Bitcoin. And they've acquired those for an average of 73,277 per Bitcoin. And guess what? When Bitcoin was 72,000, everyone said it's too late. I've missed the boat. It can't go any higher. As many people will be saying now at the prices today. As they were saying when it was $10, $100, $1,000, $100,000, $10,000. Everybody feels the same, but we don't focus on price. Your job is to own more Bitcoin this month than the previous month. Do that for a minimum of 4 years. Review in 4 years' time and realize you most likely beat the shit out of every asset class that exists, and you didn't need any Wall Street banksters stealing money from you in between. And that's what I want for everybody. I can't promise that that will happen again in the future, but I've been saying this since 2011, and everybody that has done that has either gone at the extreme to billionaires, millionaires, and has, at least escaped the debt cycle. And now they're looking at, they're deciding whether to borrow against their Bitcoin to buy a house or just buy it outright. I say buy it outright. I can't give you financial advice, but it means you can drain the swamp of the banks if you don't take your Bitcoin, collateralize it, and borrow against it. Anyway, we had the strategy earnings call yesterday, and this is the first earnings call under the new FASB rules. The new FASB rules, pretty geeky. Essentially, it allows you to book your Bitcoin growth for the first time on a US public company, and you can book it as earnings. So if you own some Bitcoin and that Bitcoin goes up in price, previously you weren't able to book any of that, and you'd have to actually book it at the lowest price of Bitcoin, which is a bit of a stupid accounting process because it doesn't reflect the reality of the company. But now with the FASB rule, like it or love it or think, you can now book that as earnings as well when it basically goes up. Now, when it goes down, you'll have to do negative earnings as well. But this is the first time that a public company in the US has been able to utilize this, and the earnings were in the multiples of billions as well as a result of this print. What it also means is that companies that analyze Wall Street companies, with all of these hundreds of Bitcoin treasury companies, would probably need to start figuring out how to analyze earnings potential. And when analyzing this earnings potential, it will have to start figuring out how to model the price of Bitcoin. This is going to have to be factored into the equation now, which means that there needs to be sophisticated modeling just as a result of these accounting processes. Just like Berkshire Hathaway, one of the Warren Buffett's company, they have to always mark their assets as earnings, and this is how Bitcoin will be done now, just the same way. So it basically makes Bitcoin treated in a similar way, and it can be all done with Bitcoin now. So this is a new accounting process as a result of this as well. This can even end up, really creating new demand for Bitcoin. Now there will be a model to do that. And if those that have Bitcoin on their balance sheet as treasury are outperforming the standard operating companies, like Tesla owns Bitcoin on its balance sheet, now it's got a model to increase its earnings. We know that public companies like to play financial shenanigans. And every quarter, based upon their earnings, they get to unlock, if the share price increases, their share options. And so this is why I don't recommend messing around with these human counterparty businesses, because you always add the corrupt human in the middle and all the shenanigans that you can't model. But as a result of this, you can imagine many public companies will look to adjust based upon superior earnings and superior stats, just based upon the having these treasury companies. And obviously that can work in reverse as well. So we'll start to see that as well. This essentially changes the earnings per share, which is the normal calculation that people use in modeling share prices, for strategy. So we'll look forward and we'll keep covering it. It's an interesting model. As again, you don't need to be involved in any of this stuff. I just want to keep you up to date so you can understand where the demand for this Bitcoin is coming, moving into the future, because there's only so many Bitcoin and there is more demand right now at the moment. So the only way to pay for that Bitcoin is to pay a higher price. As long as you're buying Bitcoin each and every month, you can dollar cost average and ignore the price. But at the same earnings call, there was another announcement from Strategy. They're raising $4.2 billion rather than $2.1 billion for their next financial product. That cap table is looking pretty complicated. You better be pretty sophisticated to analyze the risk of this thing. But they have their earning calls, and people are, and this is how it's working. Now, the other companies, the copycats of strategy, they're getting ready. So the other big one is the partnership between SoftBank, Cantor Fitzgerald, Jack Mallers, and Tether. I've covered that many times. Go back to some of my videos where I talk about the banks want your Bitcoin, of why I think that's a really bad move. And Jack Mallers is kind of being used as a patsy in front of some of the the deep state actors, let's call it, if you're familiar with my content. But the Bitcoin native new public company is called 21, and it's set to go public, and it's going to have 43,500 Bitcoin, which is going to include another 5,800 from Tether as well. And so that's set to go public as well and put those Bitcoin in, and that will make it the third largest US public corporate Bitcoin treasury company holder. That's a mouthful, isn't it? Number one, Strategy. Number two, Marathon, which we covered in the beginning. And then number three should be 21. So 21 Capital is also looking at what is their operating business model, as well as holding Bitcoin. And of course, because it is partnering with the financial terrorists at Cantor Fitzgerald, the debt dealers like to deal with some debt. And so, of course, they're looking at Bitcoin-backed loans and allowing you to take out some dollars, some dirty fiat dollars to cover your operational costs by locking up some Bitcoin with them. And I told you, remember, the whole complex gets built. And then you've got the financial terrorists like Howard Lutnick and Cantor Fitzgerald and SoftBanks. They're able to build this different complex. And eventually, I put the warnings out there. They can manipulate the price short term in order to give you a margin call. So if you're engaging in these financial weapons of mass destruction, make sure that it's only with a small percentage of your Bitcoin, and you are managing your Bitcoin as if the when you hand it over, things can go wrong. The big problem with Celsius and BlockFi is people were putting their entire life savings, borrowing against it, and trying to get yield on it, which is a different type of model, which we're not going to go into. But we will go through one of the lawsuits that's progressing as a result of the Celsius bankruptcy. The last time these Bitcoin-backed loans went terribly wrong, and people ended up in a massive bankruptcy process. I'm speaking from experience. I'm the 7th largest creditor, and Maszynski, that goes to prison next month for 12 years for that debt-based Ponzi scheme, still owes approximately, I think if we took the value of the Bitcoin, we'd be looking at over probably $100 million that guy owes me. Some of it came back, and I had to lobby the court for a couple of years to make sure that the Bitcoin was retained, which is what saved many of the creditors. And now there's a court case. I'll go through that in a little bit. That's part of This Week in Bitcoin as well. Now, I've been warning you against these Genius Act, and I talked about the surveillance state and the different types of integrations. And looking at the TradFi players that are all going to be getting into stablecoins. Now, when you're messing around with your spending money, I don't mind. You can separate your saving money and your spending money. And when it comes to spending money, fiat currency has a purpose. I limit the amount of fiat currency that I have. I definitely don't save in fiat currency. That's a recipe for financial disaster. But in terms of your spending money, there's going to be the ability to use Stripe as a merchant, which is one of the largest merchant processors where you can take card payments as a business. And then in the future, you'll be able to pull it out as stable coins. And once it goes into stable coins, you can then programmatically earn Bitcoin. All of this innovation is to come as well. But we had an announcement, and I said, but there is a trade-off. It's going to be complete surveilled. It's going to have artificial intelligence integrations, and it's going to usher in this 1984 totalitarian type of economy based upon these AI integrations. And immediately, Stripe made an announcement stating that Stripe is accelerating the utility of artificial intelligence and stablecoins with its next major launches. And so we are moving to that world, and it is happening just as fast. Remember, and I'm going to cover the blog post where I went deep into this with George Gammon, but remember, with Stripe, follow the money, who were the early investors? The PayPal mafia. The PayPal mafia that we were talking about that's integrating into crypto payments. And both Elon Musk, one of the co-founders of the PayPal mafia, and Peter Thiel, the CIA and Mossad-backed operative that gets to use the surveillance state technology that is privatizing with Palantir to usher in crimes against humanity funded by state and a big, beautiful bill. He was also part of the PayPal mafia, and they were both seed investors in Stripe. And so what else do we know about Stripe? Well, Stripe, I said they acquired a stablecoin provider, and that stablecoin provider uses BlackRock in order to manage their treasury and money market funds. So now you've got this combination of Stripe payments, integrations with artificial intelligence, the investors being Elon Musk, the social credit score guy, and Peter Thiel, the crimes against humanity, war criminal, Palantir, surveillance state, border protection, surveillance state guy. And you've got BlackRock, the manager of the proof of weapons network, all coming together in order to put together the financial infrastructure for Stripe stablecoins ecosystem via its acquisition of a company called Bridge. And so that Orwellian nightmare is all coming together now that they've got Genius Act, and the crypto lobby has lobbied the Trump administration to print the money with the big, beautiful bill in order to usher in this surveillance state. Now, of course, in the SEC, Gary Gensler is out, the operator of the person that allowed Operation Choke Point 2.0 to happen, the corrupt one that only met Sam Bankman-Fried from FTX and wouldn't meet anyone else in the industry, that supported this ushering in of BlackRock ETFs and the hostile takeover of part of the centralized infrastructure of Bitcoin. The new chairman of the SEC has come out and said, with its crypto-friendly stance, based upon the White House crypto report, based upon the crypto SAR as well, that the SEC is saying that US is going to tokenize everything, and they're going to tokenize all of the capital markets in America, which essentially means 24/7 programmable securities, which are going to be integrated with all this technology and stable coins that's being built. But now it will be 24/7 trading, and we're going to have this massive Orwellian tokenized securities, stable coins, covert central bank digital currencies, things that I covered last week. But it's all coming. At the same time, the SEC came out and officially allowed the ETFs, which is really interesting, to create a redeem feature of Bitcoin and Ethereum ETF. Now, what does that mean? It means that institutional investors, probably not you as a retail individual, but as an institutional ETF provider, you can go directly from Bitcoin ETF to Bitcoin. Now, if they don't allow you to do it, it means they could make you in these Bitcoin ETFs the bag holder, while they're able to pull out all of their Bitcoin and get into self-custody based upon some kind of insider information. And just with 9/11, you could find out who was involved in that operation by looking at the CIA and Mossad-backed financial institutions that were shorting the markets prior to that. You can look at these operations as we move into the future around who's pulling their self-custody Bitcoin out of the BlackRock Bitcoin IBIT ETF, and you'll be able to get some kind of indication of what's happening, which is why I say stay away. They can drain the swamp, go to self-custody, but they probably won't let you go to self-custody. But it is actually pretty remarkable that now they'll be able to settle directly into Bitcoin rather than cash settled and having to take it to dollars in a bank with all the slow things that can happening. Talking about banks, Standard Chartered says that Ethereum treasury companies could end up buying 10% of all ETH. Remember what I said? Ethereum is proof of stake, which means as ETFs purchase more Ethereum, they get to stake it and they get to control through covert operations the network, unlike Bitcoin, because it doesn't have this staking mechanism. Speaking of other stories as well, I told you earlier about Celsius and Mijinski that's going down for 12 years. There was progression with the lawsuit between the Celsius estate representing the bankruptcy, the victims of the Ponzi scheme, of which I'm the 7th largest creditor, but there's approximately 650,000 victims as well. They're progressing a lawsuit against Tether because essentially Celsius took client Bitcoin, posted it as collateral with Tether, and Tether issued $2 billion of stablecoins as a loan against that Bitcoin as collateral. And this is the exact thing that I'm trying to warn you against, because I think this will be done at the institutional level with Cantor Fitzgerald and all of these different constructs. But anyway, the Celsius estate launched an update to that. They're looking to recover 39,542 Bitcoin from Tether. And it essentially said that what really happened is that they transferred them from Tether to their exchange Bitfinex. This was, in bankruptcy terms, what's called a preferential and fraudulent transaction. What that means is when you're in bankruptcy, if you end up storing your Bitcoin with a company that ends up in bankruptcy, and 90 days prior to the bankruptcy, if you withdrew, they can claw back the funds. And obviously Tether, in doing this margin call against the loan that was issued with those stable coins, this is considered within the 90-day period, and therefore it's classified as under those preference, and therefore them taking those Bitcoin in order to sell them or liquidate them in a margin contract. Celsius is now claiming that this was improperly done, and it improperly favored Tether over all the other creditors. And so this is a violation of the federal bankruptcy laws, is the allegation. And Tether allegedly, basically, is the accusation, secretly transferred those assets, saying we sold them as a margin call to cover the loan. But all they did is they transferred them over from Tether to Bitfinex at what they're claiming was a discounted price for Bitcoin. And then they got to keep all the upside of the Bitcoin, which should have belonged to creditors as per the lawsuit. And so we'll keep tracking that lawsuit because it's an interesting one to watch, particularly as all of these companies are trying to persuade you to engage in proof of weapons, financial terrorism with your Bitcoin so that they can pull off the same tricks on you. And the lawyers in these bankruptcy have like a double whammy scam where they get to spend your Bitcoin on the bankruptcy court. And just to add suit to, ever since the bankruptcy ended, in engaging in these lawsuits, the lawyers keep money aside that belongs to customers, and they've spent another $158 million just pushing forward these cases. Now, if they end up recovering all of those Bitcoin, it will be worth it. But just a lesson to you on why you should self-custody, because the banks want your Bitcoin. And if you think that the shenanigans that the crypto companies were up to aren't going to be done on a higher scale with the blessing of the Federal Reserve and the proof of weapons network and the fractional reserve debt-based Ponzi schemes, I have a lovely war to sell you if you believe that as well. eToro, another financial technology company, they announced that they're going to be taking their stocks and they're going to be tokenizing them, and now they're going to be open 24/7 to anybody that wants to trade that. So essentially, it's transitioning the market to not being closed on weekends. and people will speculate over the weekend based upon the tokenized market being open, which will become like a forward market to the underlying shares. So it's going to add a new element of speculation and arbitrage. Now, I wanted to cover just a few more stories before we do the little AI summary, because I want to make sure you're up to date what's happening in this whole central bank digital currency / stablecoin world all around the world as well. So one of the projects that we've been tracking for a long time. Now, what was really interesting is there was an interview on Tucker Carlson with Richard Werner. He was someone that before I got in the Bitcoin community was part of the monetary reform community. And interestingly, there were three of us involved in the community pre-Bitcoin. We kind of forked off in different directions. Richard forked off in the direction because he was the inventor of quantitative easing and believed that QE works when banks create money for productive business loans, but they destroy the system when they're used for real estate, which is how it is used, and used for consumer debt, which just indebts the nation. And so it's unsustainable. That was his theory. But if it's used for business loans and productive loans, then you can outgrow the interest rate on the debt. Don't want to go too deep into that, but Tucker Carlson did an interview, and it just reminded me of those old monetary reform days prior to Bitcoin. When Bitcoin came along, it changed everything because I didn't have to persuade banksters and politicians of trying to get to something sustainable. We just got to opt out and build our own system. That's when monetary reform got exciting. But I remember three of us that were all involved in the monetary reform movement. I went over to the Bitcoin side and started advocating for everybody to go into Bitcoin. Richard criticized me because he was saying that Bitcoin is a CIA operation. I told him it's open source and it really doesn't matter because it's open source code using open source libraries on a distributed supercomputer with no backdoor where everyone gets to back up the node, and you can run any version of that code. And so therefore it doesn't really matter whether some of the technology like SHA-256 was created by open source libraries by intelligence agencies, but he took it that direction. And there was another guy, his name was Ben Dyson. He started working for the Bank of England, the real financial terrorist, and now works for the Bank for International Settlements, the real financial terrorists, the ones that literally funded Nazi Germany and created the European Union in order to destroy Europe and centralize it. And now he works on the project of a central bank global surveillance state technology using mBridge at the Bank for International Settlements. So we went off in very different directions. Bitcoin and started advocating for Bitcoin. Then getting stuck in the intelligence and not understanding the tech with Richard. And then Ben went over to working with the real financial terrorists, destroying the world with central bank digital currencies. But anyway, what's interesting is mBridge, the central bank digital currency platform that had its Hong Kong branch that integrated all of the different central bank digital currencies through the Bank for International Settlements, basically handed over the project to its member central banks. And so now the project is not managed by the Bank for International Settlements. As for geopolitical reasons, we're getting this independence with the different BRICS corridors. So China, Thailand, the UAE, and Hong Kong were involved in integrating their central bank digital currencies, but now the Bank for International Settlements has handed over the project. And so China has basically, looking across these different things that are happening in the CBDC world. In Europe, we're entering into a CBDC starting in October with a beta test. In America, they're moving over to this surveillance technocracy with stablecoins. With BRICS, they're going to be moving over to China launching a CBDC, but many of them have started to use Bitcoin to settle between each other and looking and exploring these different stablecoins. Now, America wants to dominate the dollar through stablecoins in order to try and keep and prop up the proof of weapons network. So we're going to enter into a big, ginormous currency war. And in a multipolar world, Bitcoin will be at the center of that because of its superiority over gold in terms of auditing different countries that don't trust each other and being able to transfer through multi-signature arrangements between these different central banks and financial institutions. Now, that doesn't matter to you because you own it in self-custody. But I just want to make sure you're keeping an eye on this as we transition to this world of central bank digital currency. Because China announced this week that they want to move forward with BRICS being able to remove or move closer and closer to removing their dependency upon the dollar. And part of BRICS is they haven't launched a currency, but 90% of all intra-BRICS trades are now switched to being done in their local currencies. And so what actual impact does that have? Well, 65% of all BRICS trades were done in the dollar, previously. And so now the BRICS share of, now we've got 90% of all those trades happening. And it went over $1 trillion worth of trades. And a lot of that, or part of that, is being done with crypto, stablecoin, and Bitcoin settlements as well. So where is that trend going? We need to keep an eye on this because I often talk about the multipolar world order, but I think we should really be looking at the latest stats we get. So BRICS share of global SWIFT payments increased to approximately 6.4%. So that means more of BRICS members are involved in those SWIFT payments that they're looking to create alternative cross-border payments for as well. And their settlements basically has increased to 15%. So this is a larger portion of the network as well. BRICS now accounts for 40% of global GDP when measured in PPP. And what PPP is, it takes GDP and it adjusts it for, the cost of living. And so you have to adjust for the cost as well. So this is a increasing block in terms of its influence. If you take the G7, the top 7 Western economies, they've only got 28% of global GDP. BRICS has now 40%. And so they're growing at approximately 4% annually compared to 3.3% for the global economy. So BRICS countries are growing at a faster rate than the other parts of the economy. And so while we're not getting this massive switch to an alternative currency, we're getting this slow movement to being able to transact without the dollar, which is why more and more central banks, there is a declining trend in terms of central banks using dollars as their reserves, and they're using gold as their reserves. Now, the Bank for International Settlement is releasing guidance in terms of whether central banks can use Bitcoin as their reserves. And it will be interesting to watch. Now, what's happening in the US at the moment? Now, as US is going into this debt bomb at the moment, it's basically rolling over more and more of its debt into short-term bonds, which is what we're seeing. And we'll cover more of that in the macro section. But let's remember, who actually came up with the idea of BRICS in the first place and the acronym? Well, it was actually pushed by Goldman Sachs. And Goldman Sachs is an important part of the proof of weapons network. The proof of weapons network, the financial industrial complex that pushes money up to the asset managers, is investing in this multipolar world, which is why, as I've always said, tariff policy and the installation of Trump was a proof of weapons network operation, because the cost of lending to the US government, the amount of yield that the US government needs to pay to borrow for 10 years or 30 years is still increasing and increasing. And now 97% of all of the stable coins are backed by dollars. So it's only 3%. So dollar absolutely dominates the stable coin market. And those stable coins in dollars are backed by short-term treasury bills. And so Tether right now holds more treasuries than South Korea, the nation state of South Korea, which is an ally of, and has a currency pegged to the dollar. And so stable coins, as we've always been covering, is the future of what the dollar wants to do in order to maintain dollar dominance, which is what's creating the wealth inequality, whether you get the dollar strengthening, but we're getting this dollar weakening at the moment, which reset the order into this BRICS type of policy. Now, temporarily, the dollar's actually gone up this week as a result of announcing the trade deals. We'll go through the trade deals in the macro section. But let's look exactly at BRICS countries for crypto and Bitcoin so far. This is when you have to go outside. So China, anyway. Where is China right now? China is systemically reducing their treasury holding position. It's been going down and going down in order to protect itself from the dollar. China has been accumulating the largest oil reserve in history to the point where it competes with OPEC. And it has been increasing its gold reserves as it sells down its US treasuries. Now, there's not been much announcement on the Bitcoin side, but even though there was meant to be a Bitcoin mining ban, still we're seeing increasingly more and more mining operations that are coming out of China, and it is still creating 90% of the ASICs. And so China is still a player, which is important to keep that apolitical, geopolitical neutrality by having Bitcoin mining in very countries that don't like each other. They're also trading using Bitcoin, stablecoins, and crypto with Russia and Iran for oil deals with each other. And so when they're trading, they're either using their local currency or they're settling in Bitcoin and stablecoins as well. And that is happening between, both Iran, China, and Russia. Saudi has started accepting yuan for its oil sales to China. So now, what used to be 100% of the petrodollar settling in dollars, now 30% settles in the Chinese yuan. And you can bet your bottom dollar that will eventually go to a CBDC or even a stable coin. And you can have these settlements between in the neutral currency. So all of this is worth watching as we move, But as I said, China, at the moment, there's a Bitcoin exchange ban and a Bitcoin mining ban, even though they still operate and there's still mining happening. What about India? Well, India is involved in conflict with both China and America at the moment, but America is threatening these ginormous tariffs on India and saying that there will be a 100% tariff for thinking about any alternative to the dollar. In practicality, it doesn't matter. We'll go through more in the macro section on India and how it ignores everything because it doesn't have to. But this is what we're seeing on the India side. And now they're embracing the market. We're seeing more and more volume with Bitcoin, which is, a nation that saves in gold in general. But as the younger people come up, they're saving in Bitcoin as you get these shifts as well. So BRICS central banks, they bought more gold in 2024 than any other year on record. So they're going deeper and deeper into gold while settling more trades in crypto, stablecoins, and Bitcoin. Russia went from a hostile ban of Bitcoin back in the day that wasn't really a ban to completely embracing it for international settlements, even launching Bitcoin-backed bonds as well, using Bitcoin structured products as well. And then launching all of these different products on Bitcoin as well. And obviously, when UAE joined BRICS alongside Egypt, and Saudi was invited but didn't fully join, but is a guest that attends the meetings, And then you had Egypt, Iran, and Ethiopia. UAE has obviously become a massive crypto hub. They just needed to solve the banking issue, and we said that now the first banks are starting to get involved, and they have a dollar peg. So you're starting to see that the Middle East, as I've been predicting geopolitically, is going to be sat in the middle between these BRICS, the US, which will be these stable coins, and these euros of central bank digital currencies. And they're all going to clear through neutral jurisdictions within the Middle East, is my forecast. Which is why I think energy is being used not only to build artificial intelligence data centers, but significant amounts of it is being used to build Bitcoin and Bitcoin data centers and infrastructure as well. And so, same happening with Iran. They've been mining a lot of Bitcoin, and we don't know the full stats on that. But there is no current unified stance within BRICS on any type of Bitcoin, stablecoin, or crypto policy, which is something that could come along as we enter into the next phase as well. All of the countries in BRICS still work with the US, and so they still accept the dollar. So as the dollar moves more towards stable coins, they're going to start, looking at these different types of hedging alternative, and we're going to enter into a ginormous currency war. And I think Bitcoin's going to be the neutral asset that sits in the middle as this whole strategy evolves. We know that the strategy of divide and conquer and try and push stablecoin adoption will be one of the tools for the US proof of work weapons network in order to vassalize, and I'll cover more of this in the macro section. And we know that there's going to be these different payment systems that are being built by these different corridors, like BRICS, like the ASEAN countries, like the Gulf Cooperation Council. And together, they can essentially decolonize from the proof of weapons network by using a Bitcoin as a national strategic reserve and tool. So remember, BRICS was created by Goldman Sachs. America is now moving to the stablecoin standard. As all of the different companies move to tokenization, it's going to be easier to get out of the broker, out of the exchange, out of the bank, and you're going to be able to settle these in tax neutral jurisdiction as we move to this globalist kind of Orwellian type of programmable money, and Bitcoin's going to be the resistance against that as well. The GCCs working and negotiating with BlackRock, as I cover in the geopolitical section, I'll continue to cover. And the proof of weapons network is invested in this multipolar world order. So I see this as something that is happening slowly. And you've got more time to accumulate Bitcoin. So continue accumulating every month, own more Bitcoin this month than the previous month, and make sure you do that for a minimum of 4 years. Once you look and review at the end of 4 years, you'll look back at all those different assets and realize you beat the shit out of the Fed. So Bitcoin is the exit, and it is the hedge against all of these uncertainties. You can be a geek like me, you can follow Bitcoin HardTalk, or you can just do the simple stuff. And every single sanction that happens from a centralized player, every single freezer of assets from any type of account, every single monetary debasement, central bank digital currency launch, it creates more demand for Bitcoin because none of that competes with Bitcoin. That competes with banks. Stablecoins, central bank digital currencies, and banks are all competing with each other. And Bitcoin is the strategic reserve for those that want to opt out. Even for the countries that want to build their sovereign reserves. Even the companies that want to build their treasury reserves, as well as your ability to remain sovereign and hold it in self-custody. Because BlackRock wants your Bitcoin and they want you to hold it with them, and they are building the complex to do the Celsius pump and dump. But I think Cantor Fitzgerald is the one that's going to be executing that. They want to tokenize everything. It's all moving in that direction. And they want you to borrow against your Bitcoin so they can do the same as Celsius, and you end up in a lawsuit as well. Remember, US stablecoins plus BRICS equals Bitcoin adoption. And that is the reason to own Bitcoin, not that it crowds out Bitcoin, is the very reason to own Bitcoin. And so before we move into the macro section, as promised, the last part of part one this week in Bitcoin, because this was an extended section, I just want to cover a quick AI summary. Azad's going to play it for you shortly, that goes through a blog post where I've published the video, a TLDR summary, all of the different, if you prefer reading, you can read it. But it goes through the George Gammon interview where I went through the plan for BlackRock and Palantir, and which I'll be playing. Sorry, that's going to be in the next section when I cover the surveillance state. What I'm going to be covering now is the debate that I had, another blog post, where I was basically involved in a big debate around Zod, if you could play the AI summary of the debate blog, and then we'll move into part two.
Welcome to our deep dive. Today we're looking into, well, a really intense online debate. It started in finance, but quickly spiraled into geopolitics, trust, power, the works.
Yeah, it's centered around Simon Dixon, the Bitcoin and alternative finance pioneer. We're digging into his take on an X space he was in.
Right, an X space that's like a live chat on X used to be Twitter. And Dixon wrote about it, connecting financial systems, real-world stuff, and why he thinks Bitcoin is fundamentally about peaceful resistance.
So our goal here is to unpack that, see how following the money, as he puts it, can reveal some surprising things, and why sometimes the personal gets, well, very geopolitical.
Okay, so let's set the scene. This X space, Dixon says it pretty quickly moved away from its original topic.
Right, apparently it started somewhere else entirely, but landed on this fundamental clash about trust.
Yeah, you had lawyers like Joe Carlosar and Zach Shapiro arguing that, look, the world's complex. You kind of have to trust subject matter experts. Doing your own research doesn't always cut it.
Which is a fair point in many ways. But it raises that big question for you listening. Who do you trust when there's just so much information, so many narratives?
And Dixon came in with a completely different angle, didn't he? Based on his, 25 years looking at money and power.
Exactly. His counter was simple: follow the money. He basically suggests powerful people often have their stances dictated by who's funding them, that they might be compromised.
He even called it out directly in the space, asking panelists about their clients.
He did, and he framed it not as like a personal attack, but as crucial context. Conflicts of interest, right? It ties straight into that core Bitcoin idea. Don't trust, verify.
So a real clash of philosophies on how to even find truth.
Absolutely. One side saying trust the experts, the other saying verify the incentives.
Then things apparently got tense. Dixon talks about hitting a red line.
Yeah, he says it happened when he brought up what he described as the ongoing U.S.-funded genocide in Gaza. He refused to let it be brushed aside.
And the reaction was pushback, telling him it's anti-American propaganda or just talk Bitcoin.
That's what he recounts. And he points to this as a tactic using labels like conspiracy theorist or, anti-Semitic to shut down difficult topics.
He mentioned a specific exchange with Zach Shapiro.
Right. Dixon says Shapiro stated he didn't see it as genocide and saw Hamas as the bad guy. For Dixon, this interaction was revealing. He connects it to what he calls the proof of weapons network.
Proof of weapons network, meaning?
He essentially argues it's a system, a network that profits from conflict, from war and destruction. And he saw that disagreement as exposing that network's influence, in his view.
So, okay, how does he tie that explosive idea back to Bitcoin? Why is it relevant?
Because for Dixon, separating Bitcoin from geopolitics is just wrong. He argues Bitcoin was made for this exact situation. It's resistant.
Resistance against what specifically?
Against the financial institutions, the systems, that he believes fund these wars. He talks about being at the very first Bitcoin conference. And the feeling was us versus the banks. Bitcoin was designed, he says, as an exit.
An opt-out.
Yeah, an opt-out from what he calls a corrupt banking system that props up the U.S. dollar with war, death, destruction, and violence. Strong words.
So for him, Bitcoin isn't just like digital gold or an investment. It's a practical tool.
A tool for peaceful protest. That's key. Boycott the Fed by saving outside their system. Boycott BlackRock using self-custody, not EPFs. Boycott banks by not borrowing against Bitcoin. Even boycotting the war machine through conscious spending.
It's a freedom technology then. More about principle than price swings.
That's his core message. It's a way to fight back, peacefully, using finance itself.
Now, there was something that happened after this X-Base finished, wasn't there? A kind of postscript?
Right. Dixon mentioned that during the debate, his opponents argued nobody could really know the ground truth in Gaza.
Yeah.
Well, shortly after, a video came out from Tucker Carlson. It featured a whistleblower, retired U.S. Green Beret Elteen Cole, Tony Aguilar.
Okay.
Aguilar was apparently part of something called the Gaza Humanitarian Foundation, or GHF, and was on the ground. He reportedly confirmed witnessing horrific war crimes.
Wow. And Dixon saw this as
validation. He highlighted it as evidence supporting his own earlier statements, where he'd characterized the GHF as a U.S.-funded operation perpetrating a Holocaust. He points out this info came out after the debate.
So looking at this whole episode through Simon Dixon's lens, it really paints a picture of money, power, and global events being, well, deeply connected.
Definitely. It pushes you to think about personal responsibility when faced with these huge, complex geopolitical situations, and whether something like Bitcoin can actually function as that peaceful resistance he talks about.
It leaves you with some big questions, doesn't it? In this world flooded with information, with influence, how do you decide who or what to trust?
And what part do your own financial choices play? Is that Bitcoin mantra, don't trust, verify, just a technical thing for crypto geeks? Or is it maybe, just maybe, a broader guide for navigating, well, everything, something to think about?
Okay, welcome back, everybody. So, if you want to go check out that blog, so on my blog, simondixon.com, you can head over to the blog section, and it's called The Real Bitcoin Debate. You can't separate geopolitics from your money. What I'm noticing is that geopolitics and Bitcoin and macro seem to be merging more and more and more as these stable coins and Bitcoin come out as a real player. So you can check out that blog and get the TLDR, and you can see how we hang around on X Spaces as the community seems to be forking off in different directions. Okay, so that's everything I've got for you this week in Bitcoin. We covered basically what did we cover? I can't even remember. That's how much we covered. We're now going to move over to part two. And in part two, we're going to be covering this week in macro. We're going to pivot over to how Bitcoin can be used as a mechanism for escaping the EU and UK surveillance state. And I'm going to be going through all the trade deals that happened this week and how to interpret them. So we've still got a lot to cover. And in part three, we're going to be going through everything that happened this week in geopolitics as well, along the lines of the surveillance state theme. Okay, so I'm going to take a little bit of water and then we're going to jump straight into part two.